following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad.
Good.
In fact, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother. That's so cool.
Right, yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting.
Yeah.
But as far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate you prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We have the Dow Industrials down 32, NASDAQ off 11, S&P's down 1, gold contract up $9.10, trading at $12.17 an ounce. Silver flat at $17.44 an ounce. Platinum flat at $9.98 an ounce. Copper down 2 pennies at $2.68 a pound. Light sweet crude down 36 cents at $53.52 a barrel. Notes, 10-year note flat, 124.10. 30-year bond up 1 tick, 150.15. King dollar up 212 ticks, trading at 99.820. The euro is at 107, and the yen is trading at 112.75. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You got another sideways day. You're down 22 cents. Realistically, it's sideways. You're sideways with light volume. So bottom line, what do you have out here? Well, you don't have volume each and every time we go up to the highs. You don't have enough volume to crack the market down. But what you do have is that when we go back to Monday, you have volume on the way down Monday. We have volume at the 30th. That is saying we get a slow rollover happening in the marketplace. Dow Industrials. What do you have with the Dow Industrials? Same type of setup in the Dow. The Dow actually is given a little bit more information, meaning that it wants lower price. What we had out here is that Monday you had a down day, you had the volume, all of the above. We go top side yesterday, couldn't handle higher price. Bottom line, you're sideways to slightly lower. Dow looks like it wants to make the run down to the 19,677. Right now, we're at 19,860. The composite, NASDAQ composite. Composite is trying to get to its highs, can't handle it. So this gets really intriguing because, of course, yesterday I had Facebook, made good numbers, was up $3 after the close. It's down $2 right now. Apple, prior day, up $8. Apple had the juice behind it, but guess what? Apple's done what it's done. And being such a large weighting structure inside the S&P, the Dow Industrials, and the NDX 100, that's all she wrote for Apple, and meaning those indices also. So the composite right now, down $11. You're at 56.30. This looks like it's going to go into 55.78. That was the low that was also established on Monday. That's a high volume low. We go into the 3Qs, the NDX 100, because the NDX 100 is going to be moving after the close out here with Amazon. We're at 125.22 right now, sideways move, dramatically lighter volume. Now, what the cool thing here is this. is that it got to 125.70. 125.70 was into the highs that were established, the last high, which is the 27th of January. Well, the low of that high is 125.39. We did 25 million shares, so that is a test of the low of the high. It's going to have dramatically lighter volume because we are not going to do 13 million shares in an hour when we just did 12 million all day. If we close where we are now or under 125.39, that's going to set up lower price coming into this jobs number tomorrow. Gold contract. What do we have with gold? Now, this is this whole market right now, folks, is it's really cool. Let's walk through it because it's really cool what's happening. And it is, when I say it's really cool, it's also what I mean by that's challenging. And when markets are kind of like this, and I'll show you what we're talking about, it's like, oh man, you know, is gold going to continue to keep going? Is the bonds going to go back down versus up? And so check it out. Gold today got to 1227. We're at 1217 right now. We've done 217,000 contracts. That is pushing into the swing points with volume. So that is saying that we've pulled back $10 in the gold market. Still up good, but pull back $10. That is still telling me that, number one, you're going to be up at that level, and number two, because we're already in an ABC structure on the way up, that gold contract wants to run up to the 1258 to 1315 number. Big number. Silver. Let's go over to the silver market. We take a look at silver. Silver had already taken the B point out of an ABC structure on the way up, so you have a confirmed ABC structure on the way up in the silver market. Silver out here today has done 59,000 contracts, which is great contract volume. The silver ABC structure on the way up is $18, I believe 25 cents. That being said, it looks to me like silver wants to run up to this $19.10. Now, notes. We'll go over to the note market. So, what notes had done is that they rejected lower price yesterday, had lighter volume. That's saying they want higher price. Today, what you have is that you got to a price point out here of 124.22. You've done 1.2 million contracts, which is pretty good, and now you're giving it up on price. So this is where it gets kind of dicey. It's like, okay, man, you know, are you going to back down? We'll go into going into jobs number. That being said, this still looks to me that what you're going to get, and we'll see how this closes out the day, this still wants to get into higher price. We go to the 30-year. We take a look at the 30-year. What you have with the 30-year is this. It's the same type of setup, meaning that you have given it up on price. So the 30-year bond got into a price point today of, let's see, 150.115. Now, from that point, you're down a full point. That being said, bottom line, it looks to me like you're still going to try to get to higher price. And when we come back, we're going to do the dollar, and you're going to see what I'm saying about how it's a little bit challenging here. But I'm going to stay with the ABC structure on the way up that's confirmed inside that gold market and the ABC down that's confirmed in the dollar market. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is down at 28. NASDAQ is off 13. S&Ps are off 2. And if we just finish up that update, dollar index. What do we have with the dollar index? Dollar index, folks, right now you are at DXH7. Dollar index is up 200 ticks. We're at 99.80, and what you have is this. Okay, so dollar index, we got under this low. Well, first off, dollar index confirmed ABC structure on the way down. Blew away the B point, did it on Tuesday, wide price spread, accelerated volume. That gives you a price projection of 96,900, okay? My take is that we're going to probably make it down to the 95 area. What you have out here today is that we were getting a rejection of lower price. You had light volume, but guess what? Now what you've had since the last hour, it's pretty wild, actually, what happened within the last hour. You get volume coming in, so you're going to end up still with a lower price with volume behind that move. So jobs number tomorrow, we're going to have some moving markets out here, no doubt about it. Now, folks, let's go over to our man, Mr. Andy Hecht, as we do each Tuesday and Thursday. Andy's got a great show every Tuesday and Thursday, 5 to 6 Eastern Standard Time, all about commodities. He also got a great newsletter, the Technomento Commodity Report. You can test drive that 30 days, absolutely free. The way you do it, you come over to our website at TFNN, go to newsletters, go to trading newsletters. You can test drive the Technomento Commodity Report 30 days, absolutely free. Andy Hecht, what's going on?
Hey, how are you?
I'm doing great, man. Yourself?
I'm doing good. So, yeah, I heard you talking about the dollar while I was waiting to come on.
Yes.
And I kind of agree. It looks like it's broken down a little bit here. But I do think, the lower it goes, it's going to be a good scale-down buying opportunity because eventually rates are going up in the U.S. And, when that does happen, the dollar will bounce again. It has been making higher highs, but nothing can stop it. Nothing is really standing in the way of it of going down and testing, 96 or 95 on that index. So we'll have to wait and see. And I guess that's good news for the precious metals, which have been doing yeoman's work here today. Gold made another kind of short-term new high today, up at 1227.5. We got into this area here, the November 11th area, and I think look, gold's got to trade above 1240 to really start looking good. But listen, the action in January, Tom, was exactly the same as the action in January last year. Gold was up 5.3% in January 2016, and it was up 5.3% in January 2017.
That's wild,
now,
man.
That is
funny.
wild.
Yeah.
Now, February was a massive month for gold last year.
Right.
It was up 11%. So
Right.
we'll have to wait and see, if this is a carbon copy type of year. Silver has outperformed gold, no question about it. It's been gaining on gold. I mean, we got up to 17. We got to remember, we closed on December 30th in silver at 15.97, and we traded 17.74.5 today, just about 4 weeks after that. So silver's been really doing some good work here, and the next level of resistance to silver is about $19.
Oh, my take is that we're going there. So
yeah. I mean, I think it's very possible. Very interesting. I just want to point this out. As you can see on my chart, silver open interest has done a really nice job just kind of rising with price, and that's the technical validation that more people are coming to the market. It shows some investment demand, and that's been really nice and smooth. But when it comes to gold, it's a totally different story. Take a look what happened to open interest. You had on January 24th, you had 482,000 contracts of open interest. Now, February gold futures rolled to April, and a lot of longs did not roll. And open interest dropped by 17% to under 400,000 contracts. That's very, very telling. But what's even more telling is that gold got down to 1182. It stopped. It turned around. And the gold market really kind of cleaned itself out of weak longs here.
Well, I hear you loud and clear, but I also remember being at lows, and the correlation was that gold's going a lot lower, and that the open interest there was saying, okay, we're going all the way down, and they got toasted.
Well, absolutely. Absolutely. Yeah. But what I'm seeing here, the way I explain this, is over the last couple of weeks, on January 24th, we had a very high open interest. The time of the month coincided with the time that the roll took place, the February to the April. And what open interest is telling us is that people closed their positions. They didn't roll to April. So a lot of that length is out of the market.
I agree with you saying. What I was saying specifically, though, is that they were wrong there. They were wrong on the dollar, okay? And, great. We'll see what happens. You know what I mean? The whole world was bullish the dollar, man, and they just got toasted.
Right. Well, the whole world's got to trade with tight stops in these markets. Everyone's got to trade with tight stops in these markets.
Yeah, well, that doesn't happen. We know that, so.
Well, us traders do.
Yeah. No, I agree, but the reality is that they don't. The reality is that when you have that many people on one side, a lot of them are going to be double dipping, and then, they'll finally get them out. But the bottom line is...
Well, you want to talk about people on one side, look at the crude oil market. Open interest, 2.2 million contracts. There's a lot of longs in that market, but that number is being exacerbated by the amount of hedging that's going on in the shale regions. So that number is being pumped for two reasons. I think there's a lot of longs in oil here, but I think that more than that, more than the speculative length in oil, I think what you're seeing is a lot of the shale producers just leaning into this far out on the curve to hedge, to lock in prices. And what we're seeing is spreads really tighten. And that tells us that there's forward selling in the market,
Okay.
And it's not a negative. It's not a negative. When term structure tightens, it's not a negative for crude oil. Because remember, you can't sell that production twice. The more selling that goes on during this period now is the less selling that's going to come to the market later.
But wouldn't they be able to, let's say we're a producer, so we sold, right? Then we know that we already sold, let's say we sold 3 or 4 months supply, right? And then 3 or 4 months from now, we're still laying there. Wouldn't we sell more?
But they're not selling 3. They're not selling 3 or 4 months. In oil, they're selling 2018, 2019, 2020, and that's where we're seeing the action in the spreads. The oil producers, the people in the shale, they want to survive for the next couple of years. They're not.
I don't blame them.
They're not worried about 3-4 months. I mean, that was the first thing they did. But oil's been above 50 since December 1st. They've had plenty of opportunity to lean into this. And what I'm seeing in the tightening of the spreads is they are continuing to lean into this far out on the curve. And I think that's a positive for U.S. energy independence because the oil will flow.
I guess that's my point. That
Right,
if it's flowing, how does it stay up at this point?
Well, I understand. Well, OPEC has cut production by 1.5 million barrels per day. And the one thing in oil that really people are not concentrating on right now is that there are several things on the horizon that could provoke a big up move in oil. And maybe we could talk about that.
Right. That's for sure. That's why people are buying gold. I can see that.
Yep.
Right. No doubt.
Absolutely.
You stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. Dow Industrials right now down 10. Nasdaq's off 9. S&P's are flat. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 1. Nasdaq is off 6. S&Ps are up 2. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. And don't forget, folks, you can test drive Andy's newsletter right now. You come over to our website at TFNN. You go to newsletters, go to trading newsletters. You'll see the Technomental Commodity Report, test drive at 30 days, absolutely free. Oil, the Middle East, right? You can wake up in the morning and we get up $50, right? $40.
Well,
Who knows what it is.
I mean, really, I think the biggest threat in the Middle East right now is that Iran does something with the logistical routes in the Persian Gulf. The rhetoric is definitely picking up here. The administration made some statements yesterday. Iran responded today, and these are not friendly words going back and forth. So that is always,
it's certainly on the table, right?
It's on the table now more than it's been for quite some time.
Well,
I think you'd agree with that.
Yeah, Flynn's a freaking jerk. That's the bottom line.
So the bottom line is, without talking politics or anything like that, the bottom line here is that we can see some very big moves in crude oil, and I think the downside's very limited here. So
I can see that. Sure.
We have to we will hold that range. Now, natural gas, we had a report today. We had a draw. Let's see what the draw was. I think it was 87 BCF. It was actually a bigger draw than the market expected, although it's a very small draw for this time of the year.
Okay.
So the price bounced a little bit. We got a double bottom here, Tom, at 311 on the March natural gas futures contract. But it seems like the market's trapped in a range between like 311 and 350. We're up to just under 320 here. I am concerned about natural gas. If we we trade below that 311, we could get a cascade of selling. We are running out of weeks of selling. And by the way, happy Groundhog Day.
Yeah.
Puxatawny Phil came out today. He saw his shadow. So 6 more weeks of winter. That means probably 6 to 8 more weeks of natural gas withdrawals from inventory, but the numbers are not big.
Well, and what's interesting is that, that being said, the Weather Service is saying that across the country we're going to get a 2-week hot spell here. So this is going to be pretty wild.
Yeah, I'd say you're going to see a 2-handle on natural gas if that's the case.
Yeah, and I mean right now in the Midwest, I know it's freezing, but that just came across about 2 hours ago. So that would be. Because that would kill the market. 2 weeks in February, right?
Yeah, absolutely. The bottom line with natural gas, it's all about weather. Now, listen, longer term, we have LNG, we have exports on the horizon. That's all kind of positive news for natural gas. But natural gas doesn't really care about the long term. The March contract cares about where it's going to trade between now and when it comes off the board. And that's all weather related. And that's the bottom line. So be careful at 311. Below there, we could see two handle really, really quickly. That's the bottom line there. A market that we don't talk about a lot, Tom, lumber.
Okay.
After the Fed did nothing yesterday, limit up today in the lumber.
What is the symbol in lumber, Andy?
LB. On my CQG, it's LBH.
LBH7. Okay, I got it.
Right. 347.90.
Look at that. Wow.
Last year at this time, Tom, 256 on lumber. So we're almost 100. I mean, that's big, 25 to 30% higher this year. And that's for 2 reasons. That's the prospects for infrastructure building. But more so than that, it is the continuation of low mortgage rates. New home construction continues to be buoyant. And you need lumber to build houses. Listen, I've been watching my house go up.
I buy
and there's a lot of lumber there.
I buy a lot of lumber. Okay. Trusses. They're getting delivered every freaking week. It's a beautiful thing. Yeah.
Yeah. So the bottom line here, $10 limit up. The levels to watch, 3, and never trade lumber, folks, because it's illiquid but it is great to watch. It is a bellwether commodity. The levels to watch in lumber about 353. And then around where we're close and around 356, above there, that thing can really kind of start moving. Lumber market is bid, and that's actually important for industrial commodities. We saw another new high in iron ore today, but the Baltic index is going the other way. Tom, in November, the Baltic index was up at 1257.
Right.
Today, it's below 800. But I think that has more to do with seasonal factors. Last February, we hit all-time lows at 290, and shipping activity in February is not as buoyant as it is at other times of the year. So I think there might be a little bit of a seasonal factor in there. So that's what's going on. I mean, there's a lot going on.
It's going to be interesting, too, to see how it plays out. Like, there's a couple headlines out here today, folks, and, the big corporations are going to be fighting each other about the aspect of where the tariffs are going to come in, because the big deal out here today is that you got a General Electric, Boeing are going to basically be fighting Walmart. because if this border-adjusted tax comes in place, the way that it works is that if you make things in the United States and send them out, it's going to be cheaper versus making them outside and sending them in. So our big companies are going to be fighting each other as to what tax is going to be in or out. Do you know what I'm saying? So that has a lot to do with the Baltic Index too. It's like, okay, you're moving goods. You know, how much are we going to get paid? So
John from Philly gave me a great quote the other day. You remember Moses Malone, the great Philadelphia 76er basketball player? Yeah. All right, so Moses Malone once said that 75% of the battle takes place under the net. In other words, to set up the shot. I think a lot of the stuff that we're hearing, we're reading about tariffs, about all this stuff is positioning and negotiating. And a lot of the stuff coming out of the administration is certainly positioning for negotiation.
I don't believe that. But that's like saying, people are saying, well, this is what he said he was doing. Well, guess what? I understand that's the rhetoric, but the rhetoric's turning into things that, are basically the United States of chaos. And I suspect that these large companies are going to come out and they're going to fight it, So,
anyway, I think he's positioning under the net and for negotiating, and it's going to be very interesting. It's going to cause a lot of volatility in markets as it is now. It's going to cause a lot of volatility in the dollar, which we're seeing now. We're seeing the dollar weaken, which actually is pretty good for the U.S. economy. If the dollar was continued to rage above 103, that would have choked U.S. corporate profits. So below 100, it's kind of a good spot. I think a lot also will lie on the tomorrow's jobs report. Market volatility after that jobs report could get pretty intense. I think the market's really expecting a very positive report, aren't they, tomorrow?
I know, and what's going to be interesting about that is that you had ADP, which is a big payroll processor. They come out and they've gapped down like how many points yesterday? I mean, a big number, man. And it was like they made money. But the market took them south. This thing gapped down yesterday. So this is like that gapped down from $102 to $94.
The stock.
Yeah. I mean, that's one of the largest payroll processors out there. So it's like, okay, if they're not, that to me was a heads up that maybe this jobs number won't be as much as the perception, you know what I'm saying, in the market.
Well, we'll see. Market's going to move on it, that's for sure.
Okay, man. Well, listen, we look forward to the show at 5 o'clock, Andy.
Thank you.
Thanks, man. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow down 7. NASDAQ is off 9. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So Dow right now is down 8. You get the NASDAQ off 9. S&P's are flat. Let's go over to Amazon. So Amazon, folks, is coming out with their numbers at 401. Amazon right now is up $6.80, trading at $8.39. And this is going to get pretty great looking at this. So if we just look at Amazon and we put this on a weekly basis, what you're going to see is that your last high was established the week of October 7th. That high was established with 14 million shares traded. Then what we did is that we came off that high, and you come off with some volume. You came off with 29 million, and then you came off with 37 million. You got down to 717. So you went from 791 to 717. You came back last week, and we did 16 million. So you have the 16 million going against the 29. That's on the weekly. Now, you put this on the monthly, and what you have is that you, on the monthly, you'd made a high with 77 million. You came off that high with 110. We went back up with 70. So this is going to be wild. I'd always love these ones when they're coming right out. So the take here, my take, is that when Amazon comes out, they can do anything they want with their numbers. When it comes out, that's telling me that this thing's going to trade down. So as we come into the closeout here, it's going to be pretty cool watching the NDX 100, because the NDX 100 is open till 4:15, and they come out at 1:04. Let's go to Rich in Oregon. Hey, Rich, what's going on?
Hey, Tom. Thanks for taking my call.
Thanks for calling, man. Thanks for holding.
I heard you and Andy talking about lumber, and one way to play it is Weyerhaeuser.
Yeah.
And I was wondering what you saw in the chart of Weyerhaeuser.
Let's take a look at this. Thanks for calling, man, because I saw this when you called the symbol. There's no doubt, man. Check this out, folks. So you got Weyerhaeuser, okay, huge integrated forest products company. Low's 22, the high's 33. Your PE on this is, this is interesting, man. Oh no, the PE's 39, so they better keep growing. Okay.
Yeah.
That being said, though, okay, so you got a nice sign of strength last week. Okay, on the 20th, we go from $29, we get up to 32, has the price spread behind it. The following day, it pushes into that high, and then it gives it up on price. So you pull back down. This looks to me like number one. Let me put it on a weekly, but 32.31. That's where it looks like it wants to go. Oh, look at this. It's a long-term consolidation. Okay. Yeah, I like the setup, man. One second. Let me put this back a little bit further. So we put this on a monthly. Get volume. The last time it was down. If you want to see something pretty cool, folks, the last time this was down on volume was February of this year, and of 2016. Oh no, we're in 2017, February of last year. And And what stopped it from going lower, it did 179 million shares. Well, if you go over, what you're going to see, it was coming into 225 million. This is a classic, man. This is sick. Okay, so this was coming into the high of the low of 2008. So we had 225 million there. The price was $22.46. Where does it go? It goes to $22.06, rejects lower price, has 179 million shares, has lighter volume, and yeah, this one's higher price. This is a good setup, man. This is a good setup for higher price. And you could buy it right here.
That's what I was looking at.
The bottom line is you could buy it right here. And I'm bearish the market, but this thing, you know, is set up nice. You could put the stop right under the low of yesterday, which is 30.75. You're at 31.37. You're looking for, at the beginning, you're looking for 33.28. You know, if you get volume behind that move, you know, it hasn't been able to break out since, it's been in this consolidation since November of 2015. But if you broke out, you'd be up at 37.04.
Okay.
Yeah. Action, man. Thanks for calling. That's.
Okay.
And in fact, here, let's do this. 1 second. So if I just pull this up, okay, so you got Weyerhaeuser.
Rayonier.
Yeah.
R-Y-N.
Yeah, I just pulled them up. Rayonier, Potlatch. Okay, so RYN. Let's pull that baby up.
That chart looks even better.
Yeah, okay. Cool, man. Okay, RYN. RYN. Okay, we get some stocks here to go along. So
yes.
That's another forestry products company. The low is $18.95. The high today, $28.60. Oh, yeah. See, this is already moving. I'm moving with volume, man. Okay.
Yeah.
Pull this back. Go ahead. I'm sorry.
I missed this one.
Okay.
But I did pick up the Weyerhaeuser.
Nice.
On a dip.
Okay, so let's, 1 second. RV, there's two others that are in this section that when I pull this up. Okay, what is Potlatch, PCH. Let's see what this is. Okay, so PCH owns timberland in Arkansas, Idaho, Minnesota, Wisconsin. The company grows to sell wood products, printing papers, other pulp-based products. Okay, let's see. Let's get volume too, man. Okay, 1 second. Yeah, they're all looking good. Okay, do the last one, RV. So that is, which one we didn't do? 1 second, hold on. There it is. ADN. Let's see what this company does. ADN. So they design, assemble, sell weather data systems. Oh, no. Oh, it must be A&D. 1 second, A&D. No, okay, 1 second. WY. Oh, I see. The other one's in Canada. Let me pull it up anyway. ADN Canada. ADNCN. Okay, so they harvest, market forest products, saw logs to lumber mills. Yeah, this one doesn't look as good as the other ones. Those other three, though, man. Those other three are in good shape, man. Interesting. We get action, man.
Okay, sounds good.
Okay, have a great one, man. Have a safe one. Thanks for calling. 877-927-6648. Let's take a look at some of the higher volume stocks. And this market will be a low volume market out here today, folks. You get Advanced Micro up 23 cents. Facebook's down 2.18. Here, if we go to Facebook, Facebook's going to be a major failure, folks. What you're going to have is this. It looks like it's going to set it up into a large consolidation. If we put this on a monthly basis, what you're going to see, is that you came off the first I'll put it on a weekly basis. What you're going to see is that Facebook had made a high the week of the 28th of October, 133.50. Then it came off that high with big volume, came down with 182 million. It's testing it right now. So that's going to set up, Facebook wants to run down to 113, and right now you're at 131. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. And, of course, right after the close, lots of numbers coming out, including Amazon. Right now, you have the Dow Industrials down 4, NASDAQ is down 4, S&Ps are up 2. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And if we do take a look at Amazon, so Amazon's trading at $839.40 right now. They are going to be looking, let's see, so they're looking to take in $44.7 billion. That's what the estimate's going to be. And we'll see what they can bring to the bottom line. It's going to be pretty wild watching this whole thing shake out. There's no doubt. And they come out very quickly right after this close out here. That, no doubt, is going to affect the NDX 100. If we go take a look at the NQs right now, NQH7, what you have in the NQs right now is that they are at 51.42, and there's not enough juice in the NQs. Bottom line is that it looks to me, you know, you had a high out here yesterday at 9:30. That was at 51.58. We got a high today at 51.57. We bring this a little bit closer. what you're going to see is that you've come into, you're coming into the downdraft from even this morning with lighter volume. So the NQs are also saying that they're going to want lower price at this close. So we're going to know it's going to be fast, furious, and all of the above. No two ways about that. Dollar index, we go take a look at that dollar, because what we are going to do is tomorrow morning, coming into the jobs number, the dollar is going to be affected, the bonds are going to be affected ASAP. What the dollar index has done, that came into the downdraft from 230 yesterday with dramatically lighter volume. So it's that is saying that that bounce is going to need a lot more volume. We came down, and we came down at 2 o'clock in the afternoon with 4,200 contracts. We just went back topside with 970. So that's also saying that just coming up to ice, can't handle the price. Well, right now it is handling price. It's into that bar a bit. But bottom line is that that is saying that that also wants lower price. And the question is, like, how far can the dollar bounce? It should be able to get a good bounce. That being said, I don't think it's going to, because this is, when I just showed that intraday chart, that intraday chart, that's a normal bounce, and that'll be it. That's what it's come into. It's come into that area, giving it up in spades. Let's go to John in New York. Hey, John, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. Thanks for calling. Thanks for holding.
I bought the nougat last week at 981.
Okay.
And I know you said you should not hold this too long because it's a triple leverage.
Yep.
What price would you get out?
Well, okay, so you're coming into jobs number tomorrow morning, and this is a tough one. And it's I own it too, man, and I'm going back and forth. I personally am going to keep it. But I'm keeping it knowing the aspect that, this can pull back in a second, man. Depending, where you stand, there's nothing wrong with taking half of it off the table, man, Because what has happened is this, is that you look at the GDX, and the GDX, has higher price, the volume's light, though. You look at the dollar index, that could, basically move up higher, just on a counter-trend bounce. So where I'm going with this, John, is that the gold contract is in two separate ABC structures on the way up, and that's why I'm staying in it. So there's the yin and the yang of it. I wish I could, it really has to do with your risk parameter and how much you have in it, how many times. Have you traded this a lot?
Yes.
Okay, well, you got to make the decision, man. I just told you what I'm doing, so... but I know I've been fighting this all day long, man. I've been fighting it all day long. Should I take half of it off? Should I flip the position and go into the dust? So this is just, that's where it's at. But I'm keeping it. I'm going into it, and I'm going from there.
Will we have the pleasure of seeing you at the Traders Expo?
I'm not sure yet. In New York, I'm not sure yet. Yeah.
Okay.
Have a great one, man. You stay right there, folks. We're going to be coming back with numbers from right after this close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Transform your life. When you refuse to take things personally, you feel many upset. You avoid many upsets in your life. Your feeling of anger, jealousy, and even sadness will simply disappear if you don't take them personally. That's a good card for all of us, especially now, folks. Market-wise, let's take a look at it out here. Dow Industrial's down 6, NASDAQ off 6, S&P's up $1.50, gold contract up $9.80, trading at $12.18 an ounce. Silver up 3 cents at $17.48 an ounce. Platinum up $1. 1,000 even. Light sweet crude down 16 cents, $53.76 a barrel. Notes, 10-year note flat, 124.10. 30-year up 1 tick, 150.15. King dollar up 172 ticks, trading at 99.780. The euro is at 106, and the yen is trading at 112.74. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? You got a SPY that goes sideways, can't handle higher price. Did 67 million shares. Bottom line, this looks like we got a jobs number tomorrow. I expect this is going to try to make it on the way down where they had a high volume swing low on Monday, 226.41. Dow Industrial, same setup in the Dow. The Dow actually gave a little bit more information out that, sideways, down $6. That's a sideways move. No volume inside the move. This also wants to run into the 19,677 area. Now, that's the swing low from the 19th of January. The NASDAQ composite, first the composite. So the composite went sideways also, down $6, 56.36. Bottom line, couldn't get into its high. If we look at the NDX 100, this was a failure on price, on volume, and then, we'll get into Amazon for a second. Amazon's tanking right now. So what you had with the Qs is this. The Qs did 14 million shares. Your 14 million was going into the 25 million from the downdraft on the 30th. You failed on volume, failed on price. The Qs closed at 125.32. They are trading right now at 125.08. If we go over to Amazon, take a look at Amazon. Amazon closed at 840. That's trading at 809 right now. Bottom line is that we'll go through the numbers, at the first section, but that equity is going to continue getting to lower prices. It's been bouncing around the 802 to 819 area. Gold contract. What do we have with gold? Gold contract out here, folks. Traded up to a price point today of $12.27. We're at $12.18 right now. Now you have volume behind this move. You gave it up $10. You gave up $10. That's pretty intense, in itself. Your higher swing point is the 12.23. Bottom line, my take is that gold is going to make a way up to the 12.58 to 1,300 area. So we got to make it by, if you're a gold bull, folks, we got to make it by the jobs numbers tomorrow. That's the bottom line. Silver, same setup in silver. What you have with silver, well, actually, silver's a better setup. Silver, when I say a better setup, it really has, it's given more information out. Silver launched higher once again on Tuesday, has the volume behind the move. Silver looks to me like, it's an ABC structure on the way up to $18 and change. I suspect silver's going to make this run to the $19.10 area. That is the last swing high that was up there. Now, notes and bonds. This is where it gets dicey again, man, okay? When I say dicey, I'm just explaining that they really didn't give great signals out here today. And it's a yin and the yang, and it's a toss-up, and this is why. My take, number one, is we're going higher, but I just want to show you technically what the difference is. So the difference is that the reason I'm saying that they want to go higher is this. On Tuesday, you got to a price point of 124.21. You had the volume behind the move going higher. Yesterday, you come down and rejected lower price with lighter volume. Now, that's saying you're building costs to go to higher price. Today, what we did is that we got into that high from Wednesday. It didn't have as much volume, and it pulled back a bit. Now, it certainly didn't, get into the negative, and it didn't, pull back a huge amount. But it's like, oh, man, okay, so what are you doing? Well, we're going to know pretty soon. The 30-year bond did the exact same deal, meaning, it got to a price point today of 151.15. It closed at 150.16. You did 259,000 contracts. Now, let's get into the dollar index, because what you have is this. The dollar index, and this is where the correlation comes as to me, as to where gold is going and where silver is going, the metals are going, and it's the correlation inside the dollar index, and this is what it is. The dollar index is in a confirmed ABC structure on the way down. This is as a beauty. I mean, it took out the B point, took it out with vengeance. We're at 99.795. That index, the ABC structure down is 96.965. That being said, if we go look at intraday out here, what the dollar index did intraday is that what it did in this counter trend bounce, it went up to the downdraft from yesterday with dramatically lighter volume. So that's telling me that's only a counter trend bounce. It can't make it by the price point of 99.975. That's saying the jobs number tomorrow, whatever is inside that jobs number, that's telling me that what you're going to see is that you're going to see metals higher, you're going to see bonds higher, we're going to see the dollar lower. We go over to Amazon. We take a look at Amazon out here. Amazon closed at a price point of $8.40. You're trading at $8.05 right now. And, of course, what that did is that brought the NASDAQ futures down, which we were talking about. That brought them down pretty good. Yeah, we brought that when we started out here, NQH7. You're going to see the NQ futures. They went from a price point, and this is where it's always cool when you, they went from price point of 51.45, and we're at 51.30. It's 15 points. If you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN, hit the Nadex platform, bring it up. They'll put $25,000 of paper money into your account. And you can see how these defined option contracts trade. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Amazon come out with the numbers. This is kind of how the numbers go. Let's see. So their revenue, they had 43.7 revenue. That's a 22.4% year-over-year growth. They was looking for 45 though. Earnings per share were $1.54. That beat analyst estimates of 1.36. It's about the guidance for this quarter coming. The guidance is $33.3 billion to $35.8 billion. And that was missing analyst estimates. The Amazon Web Services business grew by 47% year over year. Amazon's trading right now at 806. Now, folks, let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Basil has a great show right here at TFNN every trading day, 11 to 12 Eastern Standard Time. Also has a great newsletter. It's the opening call. The way you test drive that, come over to our website at TFNN, go to newsletters, go to trading newsletters. You can test drive Basil's newsletter 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good. Welcome back.
Yeah, it's great to be back. And thanks for doing the show. Really appreciate it. So,
my pleasure.
Yeah, it was good. No doubt, man.
I have to commend you. Tommy has matured into the business. It's like he's always been there. Really good.
I'm telling you, man, it's 10 times better than my show. I'm not kidding, man. I was watching you guys, man. I told him this morning, folks, if you haven't seen the show, when my son does the show at Basil, you both are amazing, man. I felt like I was watching Walter Cronkite, man. No, do you know what I mean? Because it's so like perfect. It's like, oh my God, this is pretty cool, man. You know, it really is.
Thank you.
Yeah, seriously, man. So, what are we going to look at, Basil?
So, let's go to the Dow straight away. The Dow, as far as I'm concerned, has made some kind of a top. It might be just a short-term top at 20,125 on the 26. One of the things about this particular pattern here, you see this whole congestion area that we've been in since about mid-December. It feels like it's a wide trading range, but it's just a very small trading range.
Yep.
What happens very often is you pop up, you break out of it, but there is such a magnet in this area that you can stay in the area a little longer. And at some point, there might be an attempt to break the 20,125. My thinking is that it's more likely we're going to break the 17,677 level over the next 2 weeks. And so we've kind of started shorting, mostly shorting now rather than on the long side. We still have some longs. But it's really this weekly chart that is so important. I'm just going to bring this back. So on the left here is the daily.
Okay.
In the middle is the weekly chart. On the right is that stork leg formation of the monthly with the neck. This is the neck that's going up, and I've got to be very aware of the doji candle that was formed in January, and there's a whole story. I actually went through it this morning on my show. What the implications of this particular doji pattern are if there's a close above the all-time high of 20,125 in February, or if there's a close below the 19,677 level in February. That's a close on a monthly basis. But it's the weekly chart that's so fascinating. The question for me now, and this is a question I have right through the indices, whether it's the dollar, whether it's gold. At this particular point, there are many indications to say that we are overbought on the technical side, but overbought on the price side of many of the indices. But here we are at peak C. And if you remember, I always like to show this particular chart. Right here, I'm showing in the Chapman Wave methodology, it's the core to the methodology is very simple, to try to identify the most obvious low bar, and then you count each successively higher peak alphabetically. The objective is to get you to the fourth highest peak, peak D.
Okay.
That's where other things can happen. So now with that in mind, now look at this. So we've got a peak C in the weekly of the Dow. The question is, do we go down first and then we go to the D? Or do we go, look, if we don't do this by Friday, I don't know if we can get to 20,126 by tomorrow at 4 o'clock. I don't think so. So it might mean that maybe next week we sneak over that high. I don't think there's all that much to the upside at this particular point. My thinking is sideways to mostly down. But look at this. If I do the S&P, SPX.X, here we go. S&P is exactly the same thing. You've got the S&P weekly chart at a peak C. Well, it's a leg C. It'll be a peak C tomorrow at 4 o'clock if there isn't a new recovery high. Look at the daily chart. Here's that G with an island reversal. And that's really unusual in an index to make an all-time high and then have an island reversal to the downside. Watching that very closely.
Well, that's bearish, right?
To me, that's bearish, but I like follow-through. And the follow-through is that the MACD is very negative, and the stochastic's way down 57%. A lot of this says to me there's distribution going on, and I would not be surprised if the 2260s gets taken out before the all-time high of 2300. So I'm watching that. But this is what's interesting to me. So we have started short positions. The other thing there is that we still have our gold GDX, the gold miners. But you see this little doji with a gap up at 24.55 in the GDX daily chart?
Yes.
I'm looking at this and I'm saying to myself, stochastic is not good. It's down at 75%. I like it over 80%. Here's this pattern in the MACD that it makes it like an M formation, but you've made a new recovery high, and the MACD hasn't confirmed it. So I've got no technical indications. I'm a little cautious here, and we are long. We've been long since 21.20, and it's at 24.55. So that's a nice gain. And we're long a gold stock. It's done very well. I'm looking at this, and I'm saying, something's not quite 100%. I think tomorrow with the jobs report could be the kicker to maybe either we get a change of direction, either gold has to break. I think if gold doesn't break about $20 to $25 to the upside tomorrow, I think that gold is going to pull back a little bit here. And one of the reasons is if you look at the dollar's made the steady move down from a peak E. Remember, we were looking at the chart that said you can go to a D in the Chapman Wave methodology. That's where you've got to make decisions. Well, we just sneaked slightly high in the dollar to the recovery high of 103.82. I have an E in the daily, a G, which is unusual, but it's a G in the weekly, and a D. There's that D in the monthly chart. So this means I've got to look at the dollar and say it's come back very sharply, and it's made these steady moves down. But look how it's held that green support line. Look how the MACD, the histogram, these little red lines are improving, and the stochastic isn't breaking down. It's a little higher than it was when it was making the low just way back at 99.79. And I have the rule of thumb that says the left side low of importance. In this case, this was 99.43, the low of December the 8th. If it takes that out, closes under it, it's got to by the second bar. It needs very quickly to break and close above, which it did today at 99.23.
Okay.
So I'm looking at that and I'm saying, I wouldn't be surprised if there's a little bit of a bounce in the dollar. It could be more time than price. Just, maybe this high of the 30th at 101.02, just somewhere around there. Takes a little time to do that. Gold needs a little bit of a breather, and maybe that's what we get. The gold weekly chart is looking very good, and the gold GDX. So I think that this could be a breather. And, we have some select shorts, and we've got Orly. I spoke to you about it recently. We shorted that at just over 282. It hit 253 this morning.
Sweet.
So some things are working very nicely, yes.
Folks, come over to our website at TFNN. Go to newsletters. Go to trading newsletters. You can test drive Basil's newsletter right here. 30 days, absolutely free, the opening call. Basil, thanks so much. Look forward to the show tomorrow.
Thank you very much, Tom. Have a great evening.
Thank you. Stay right there, folks. Coming back with some numbers for you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at CMG. That just come out with numbers. So CMG closed at 423. It's trading at 411. And let's see what they have to say. Let's see. So the burrito chain posted underwhelming earnings on Thursday, along with smaller than expected increase in revenue. Shares of the dividends, yeah, well, we know it fell 4.2%. Let's see. They reported earnings 55 cents a share fourth quarter, just shy of the 56 cents. Sales came in at 1.03 billion versus the 1.04 billion. So not the end of the world there. Amgen closed at 159. That's trading at 165. And let's see what they have to say. Earnings per share, the estimate was 279. They came in with 289. Not bad. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm doing good.
Cool, man.
Hey, I heard you talking last week on IPI, and I've been kind of keeping an eye on it. It seems to be coming back to where it based out about around the $1.80, $1.85 level. I want to see what you think about it.
Let's take a look at it. IPI is Intrepid Potash. This is a fertilizer company. The low is 65 cents. The high is 304. Okay, oh, cool. I see. Interesting. Wow. Yeah. So what you had is this, okay? You had an expansion December 6th. December 6th, you go from 147. 4 days later, you're at 304. Then it takes over a month to pull back almost to where it broke out from. We got to 175. Breakout area is 147. And then, as Dave's talking, that someone had called because it did show an additional sign of strength on the 25th. Yeah, I like the setup, man. This is a good setup. Let me see what else. So you have a setup that wants to run to 241. You're at 198. You can put a stop under 190. It's a good setup, man. Yeah.
Yeah. Okay.
Yeah.
So everything about right about here then.
Yeah. Here, let's do one other thing. 1 second. I want to see what else is in this sector. We just did this with if you were listening to the hour prior to this, folks. Warehouser. If you look at that sector, the lumber sector, that sector is ready. There's a couple good ones there too. So let's see what. Oh, interesting. So in this sector here, when I bring these up, folks, if you happen to watch on Tiger TV, these are all over the world. So a lot of these don't trade in the United States. Interesting. Fertilizer. No, this is pretty wild, though. Okay. Yeah, no, that's the one, man.
Okay. All right.
Cooking, man. Thanks so much.
You got a chance. Can you look at Morgan Stanley for me, son?
MS, absolutely. So let's take a look at Morgan Stanley. It's down.
I got some puts on it, and I'm just, I want to see what you think.
I think you get some action here. So watch what. Now this is really subtle, folks, but this is what you have here. So all the financials have stayed at their highs, and it looks like they don't want to budge. That being said, what you're going to see is that this sold down on the 17th of January. You know, it had made a high with 12 million shares, 44.60. Next day, it goes down with 21 million shares. Now watch this. It tests the high again with 10 million. No, with 30. Yeah, with 10 million. 10 million. Give me a break. 10 million versus 21. And then today, this is a nice setup today, man. It only went down 57 cents, but look at the expansion of volume. 11.6 million. You broke the swing point that had 7.2 million, and it looks to me like this wants to run down to that 38 bucks. You know, so here, let me bring up Goldman and a few others, because this is going to be what this is all about, folks. Yeah, Goldman is not saying much to us. Man, I think
Goldman's been kind of hanging at its highs. So
yeah, it's been hanging at its highs. J.P. Morgan, JPM, same thing. That's hanging up there. But J.P. Morgan came off the high already with volume, so that's building cause to get the lower price. You know, you start putting that together, what that would be saying, folks, is that the interest rates are not going to go up, because that's how the banks make the money. And that's telling me that the bonds are going to go up. We're going to get lower rates once again. And I think we're going to learn quite a bit tomorrow morning, because the jobs number is going to come out. What we've just done today, folks, we've finished window dressing. And you can see that we didn't have window breaking, but we certainly didn't have window dressing. So the amount of money that has come in the market, you know, bottom line, money's in the market. Most of it's probably put to use, but that means that there was that much selling simultaneously as that buying is going on. You know, so it looks to me tomorrow will be, Jobs Friday is always a big day. That's the reality. You know, we'll see where it just shakes out. The numbers, you know, if we look at Amazon, Amazon's going to hit the index tomorrow. That's trading down 30 bucks right now. Amgen will help it a little because Amgen's up 6, I think. Yeah, Amgen's up 6. So Amgen will help the NDX because Amgen is a good weighting structure also inside the NDX. But it looks to me that you're going to get some downdraft out here tomorrow. Cooking, brother.
Right, sounds great. I appreciate it. Thank you. Have a good one.
Have a great one, man. Have a safe one. GoPro, GPRO. Let's go take a look at GoPro. GPRO. GoPro closed at 10.97. It's trading at 9.47. That's quite a hit. Let's see what this. So this has been bouncing along. Yeah. 854 is the low. GoPro gave disappointing outlook for sales this quarter, missing analyst estimates and reflecting slow demand for its action cameras and a delayed launch of a new drone. Oh, that's insane. Revenue is going to be will be 190 million to 210 million in the first quarter. GoPro said in a statement today. So check this out, folks. The GoPro is in big trouble. The estimate was 267 million on average, and you're talking 190 to 210. In the fourth quarter, the sales rose 24% to 540 million, missing the analyst estimates of 573. The fourth quarter would absolutely be the best. I mean, I think what you have happening here inside GoPro also is that, the bottom line is that it's a camera. It's a camera, right? And, they're going to have to figure out something else. And if they're not doing the drones, which they just put off, that's going to be a problem. That's going to be a huge problem. Let's see why they put off the drones at this point. So, okay, the CEO, Nick Woodman, had been betting on Karma, the new Hero 5 cameras, to revitalize demand in the company's flagship and flagging share price, but Karma stumble only added to the string of mishaps, including production delays production delays, I see. So there's production delays for the drone. They have some problems because it's you got a camera. A camera is a camera, and just think about the cameras that we have on our phones. Bottom line, and it's an expensive camera. And the selling season, the bulk of the selling season is definitely over. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials that closed down 6. NASDAQ was off 6. S&Ps were flat. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Let's go over and take a look at FireEye. FireEye closed at $12.97. That's trading at $10.60. And let's see what they have to say. They say, okay, so the executive chairman is resigning. There's a new CFO. That's not good. Let's see where this shakes out. Cybersecurity, FireEye tumbled in late trading after issuing a sales forecast that fell short of analyst estimates. Revenue in the quarter will be 160 to 166 million. They were looking for 176 million. They also announced senior management shakeups. So bottom line is that this is down. It's going to go after, let's see, put this on a weekly. Yeah, this has a high volume swing low, actually, at 1087. Let me see where this is. This is going to be in trouble. So this is going to break the high volume swing low that it has. Oh, I see what it's doing. No, this is intense. 1 second. Yeah, it's going to break its high volume swing low. It has a high volume swing low at 1087. So it's going to blow that away. If you blow that away with volume, this would be a company that could get out of business. Let me see this. So 23 to 11. No, it's not the end of the world. So that's 12. Well, go to $7. Let me see, pull this back further. Yeah, go to $7. And this is an equity that the whole world wanted to own at $97. So they get trouble in paradise. No two ways about that. CMG. Let's go back to Chipotle for a second, see what's happening there. That closed at 423. That's trading at 422. Oh, that's not bad. Okay, so check this out. This was down like $20. Well, 12 to 20. It was bouncing around. Now it's made it all the way back up. And look at that. So there's an earnings call, folks, that just took it all the way back up. The earnings call just started at 4:32. It only took 10 minutes to get it back. So inside that earnings call, what are they saying? They're saying their comp stores, he's saying that the average check, this is the CEO talking, the average check began to rebound in December and January. He's reaffirming the full-year forecast. Well, there you go. There's a decent earnings call that gave it some juice. We go back over to Amazon for a second. We look at Amazon. That is at 804. It's kind of settling into that 804 area. And if we take a look at what Amazon is saying, let's take a look here. So they planned on Amazon. So they missed. They were looking to do $45.7 billion, and they did $43.7. That's the first part. The second part, where this is coming down, they planned on doing $36 billion in the first quarter, and now they're saying they're only going to do 33. You know, so their fourth quarter is always the biggest quarter. Pretty amazing, actually, when you take a look at it. We go over and we take now let's go take a look at the XLF, because when we were just talking with Dave from Boston, the XLF, this ETF structure, you know, November 4th was trading $19.40, goes straight up. Nice move, huge move, up to 22.78. That being said, it looks to me like it wants to come back to 21.70. Now, the reason is that you came off the high and you came off with volume. You've been going sideways with light volume, but it looks to me like it's building cause to go downtown. And we're going to know pretty quick, because I suspect that this jobs number is going to give us a pretty good clue tomorrow about which way this whole market wants to go. If we go into the XLE, take a look at the XLE. The XLE is at $72.77. Now this, just the first time it came down, filled the gap. The gap inside the XLE is $71.21. 71.26, and we've made it to 71.90 thus far. That's on the daily. On the weekly, it's not bad. We'll see what it wants to break down. You know, at this point, it doesn't look like, you know, I suspect that whole gap will get filled and we'll get into the 70, 75 area, but it's going to need a lot of volume to break down under that area. So that could be actually setting up for a buy. Let's go to the largest weighting structure in that, which would be the XOM. And ExxonMobil is still in trouble. You know, ExxonMobil is hammering its high volume swing low on the weekly, and it looks like it's going to have more volume. 1 second, 68. It is. So if ExxonMobil, folks, does the same type of volume that it did today and yesterday, that would be hammering the high volume swing low from the 23rd of September with volume, and that's saying it wants to go lower. That in itself is a big heads up. You know, we did 12 million today, we did 15 million yesterday. All this has to do is 10 million tomorrow. If it does 10 million tomorrow, you're going to have a high volume swing low that you've gone into, and you've gone into that area with volume. You know, so bottom line, that could be trouble. Let's go over and take a look at the yen for all you metal bulls, including myself. The yen right now is trading at 112.80. This has been hammering these lows, and it seems that I suspect, you know, the next move is about 110.86. But this yen, you know, when the yen took off, meaning it got stronger, the yen went from 102 straight, and that 102 area was on November 4th, right up to 118. Now what you have, that's when it's getting weaker. So 118 yen to $1 versus 102 yen to $1. We're at 112 yen to $1 right now. This is building cause to get back right to where it started off from. Because what does happen is this, is that when you either go up very fast or down very fast without building floors, like triple deckers, double deckers, high rises, you know, they have floors coming all the way up. It's a problem when the market turns, or when the equity turns. And it's always going to turn. It's just a matter of when. In this case, you know, bottom line, the yen started turning down, meaning getting weaker, stronger rather, on January 5th. And that's where the aspect of the metals market going higher. And there's no doubt tomorrow with this jobs number, you know, it's going to be, I suspect, a market mover out here. Well, it'd be a market mover in the metals. That's the bottom line. Because if the jobs number comes in huge, that would basically tank bonds, push the dollar up, and take the metal down. Jobs number comes in flat or weak, then it's just going to be the opposite. And, you know, we'll see where the whole thing does shake out. Don't forget, right here at TFNN, you can get all the programming right on your cell phone. Go to TFNN.com. You hit Tiger TV. You know, we're going to get some more numbers for you in the next segment. But I'm Mr. Andy Heck's going to be coming up 5 to 6 Eastern Standard Time, as he does every Tuesday and Thursday. So if you happen to be listening to us in your car radio right now, check it out right on your cell phone. You go to TFNN.com, just hit Tiger TV. You stay right there, folks. We'll be coming right back. Dow finished down 6. NASDAQ was down 6. After the closeout here, it's Amazon that's getting hammered. It's down $37 at 8:02. It closed at 8:39. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And if we go overseas and we take a look at overseas, let's go to the Nikkei first. So Shanghai will be opening tonight, folks. Shanghai has been closed for the Chinese New Year, but we will be open tonight, which is their Friday. So if we go take a look at the Nikkei first, bottom line, the Nikkei came down last night. We're at 18,819. That's saying the Nikkei wants to go to 18,650. Now, if that's the case, that means that the correlation there is pretty direct with the yen. When the yen gets stronger, the Nikkei goes down very quickly. So that correlation there is pretty cool, meaning understanding that more than likely we're going to see the yen go lower tonight. We're going to see the Nikkei go lower tonight. We're going to more than probably see the gold market continue to move higher tonight. If we go up and we take a look at Shanghai, now Shanghai has been closed all week. Shanghai will be open tonight. They're not going to have to play catch-up much, though, because the indices here as well as in Asia really just went sideways since they've been closed. They've been closed all week. That being said, what Shanghai was trying to do is that it's getting into its downdraft from the 12th of December. 27 billion shares, and we're going into that with 11 billion. So bottom line, Shanghai looks to me like wants to trade back to 31.05. Right now, we're at 31.59. We go into the FTSE over in the UK. FTSE over in the UK couldn't handle higher price today. You're at a 71.40. That thing is building cause. Did it get back inside the lower range? No, it hasn't got back inside the lower range. It's building cause to come back inside the lower range, which is a 71.04. The DAX in Germany, we take a look at the DAX in Germany. That's still hanging at its highs. That little baby is hanging at its highs. And that's interesting. It's amazing that, the DAX in Germany, folks, trades just like the NDX 100. It's pretty amazing. But, that being said, we'll see whether it gets back inside the 11,630. Oh, it's inside it. Hold it. Yeah, actually, it just, what it did? It just tucked inside its lower range. So that's saying the DAX wants to go to 11,425. Now, you start putting that together, that is saying that bottom line is that I expect what you're going to see out here is that we're going to continue with the sideways to lower market out here tomorrow. Amazon is going to basically hit the NDX 100. Amazon is down $36. Amgen will help it, but it's not going to help it that much. Amgen right now is up $6, so that'll help the NDX 100. What you do have is that another pressure on the NDX 100 tomorrow will be Facebook. Facebook traded to a high today of 135.49. It closed at 130. You have high volume off the top. This is going to be a little problem child here. If in fact you have volume off the high, because what we did with Facebook is that it had volume off the high on the week of the 4th of November. We're going to have high volume off the high again, and if it gets tremendously higher, that would set up a larger correction inside Facebook. Amazon also wants to correct, and we'll see how the rest of these react. If we go over to Microsoft for a second, Microsoft broke out and failed. Microsoft also had an expansion of volume today. We just went from a price point of $65.91 back to $63.17, and if this is one of the best technical setups out here, and fundamentally they came in with their numbers. That being said, Microsoft can trade back to 54 in a heartbeat. We put this on a monthly. Oh, it is on a monthly. 1 second. Actually, Microsoft can. I'm not even going to say it. Microsoft can trade back to 54 in a heartbeat. You stay right there, folks. Our man, Mr. Andy Heck's going to be coming up next. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is inside you, folks. Grab it and have a blast with it. Look forward to speaking right here tomorrow morning, 8 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.